Today we'll be looking at adjusting accounts. We will illustrate two distinct examples for this concept. The first will be unearned revenue. For this example, we have received $1,200 on the 2nd of October for advertising services to be completed on the 31st of December. Our first entry would be to debit our cash and credit our unearned revenue. This is because on the 2nd of October we have already received the cash. However, we also created a liability simultaneously. This liability is the unearned revenue account. Notice that the unearned revenue is for 3 months. That means by the end of the first month, only 1/3 of the cash received is actually being performed for. Thus, we would debit our unearned revenue account by 1/3 of the amount that had been paid. While we can now recognize our service revenue by crediting our service revenue account by the same amount. This event can also be recorded alternatively using the cash-based accounting. By using cash-based accounting, you would recognize your revenue already on the 2nd of October. You would only reduce the revenue amount by $800 while increasing your unearned revenue by $800 at the end of the period. The net effect of both accounting methods would result in the same account balances at the end of the period. The next topic is accruals, which is a very difficult concept. However, we can just simply master it by using two examples. The two accounts you can accrue for are revenues and your expenses. When you have an accrual type of revenue, you have generated an asset, while if you have accrued an expense, you have increased your liabilities. If we refer back to the accounting concepts, the new accounts would satisfy the requirements for each accounting concept. You will notice the words receivables and payables show up often in accounting. Receivables are accounts that are owed to you, while payables are accounts that you owe. So as a helpful tip, all receivables are assets while all payables are liabilities. To recognize a receivable or accrued revenue, first you must debit the receivable and credit the revenue, or you can debit your accrued revenue and then credit your revenue account. While to recognize an accrued expense, you would debit your expense account and credit your accrued expense account. Finally, after adjusting all your accounts, you must remember that you must transfer the adjustments. And once you have transferred the adjustments to your accounts, make sure you update your statements. In our next session, we'll be discussing completing the accounting cycle.